demand for retail banking services on the continent has picked up in recent years, spurred largely by the emerging middle class, which has tripled over the past 30 years to 355 million, or more than 34% of the continent's population. Joining us now in studio to discuss the retail banking landscape in Africa, Suresh Chaytoo, Head of Banks and Development Financial Institutions at RMB. Suresh, it's good to have you with us. So let's postulate, what is the retail banking landscape going to look like 15 years from now? Because we know we've seen a phenomenal rise in it so far. If you had to look far out into those 15 years, is it going to be as big as we think it will be?
Well, Sam, let me paint the picture for you. Imagine if you had a branch and you had to go into that branch and you find that most of the banks in there, you'd be able to serve a customer by utilizing any of that particular bank's platforms. What that really means is that one branch will be able to serve many banks' services and needs. And I think this is where we're probably going. I think with mobile banking, with 60% of subscribers in Africa having a cell phone of the total population, I think cell phone banking is going to lead the way. But I think one of the key things we're going to need to do is what's next. And
from
I think
here,
that's
where we are right now.
Where do we move from this? One, I think core distribution is still going to be a key driver. In other words, they need to reach other unbanked populations. Now,
and teach them firstly about the role of banking in their lives for those who don't even have a bank account.
Now, it costs $1 million to start up a branch. I was in Mozambique recently, and this is what it costs to start up a branch. So I think what banks are going to be looking for is revisiting that model of having individual branches. But possibly now we'll start looking at collaborating and saying, we have one branch, can we not serve our customers purely on a need-to-serve basis and try to grow their distribution capabilities from that point of view?
When you talk about the penetration of mobile banking so far, we know that there's 600 million cell phone subscribers on the continent. Recently talking to Zanaco Bank's CEO, and I talked to him and I said, are you going to be launching mobile banking? He looked at me with a twinkle in his eye and he said, what do you know that I thought you didn't know? So basically every single bank on the continent knows that they have to launch it. But when it comes to penetration right now, who are the leaders?
Well, firstly, there are 600 million mobile users on the African continent today, which is 60% of the population. M-Pesa started with Safaricom leading the way in Kenya. And I think FNB has done a great job in terms of their mobile banking platforms, and so has a number of other countries. So I think South Africa, Kenya, certainly leading the way. I think Nigeria, Angola, all are catching up. So I think the mobile banking of the future in terms of platforms, I think, is well on its way in terms of its maturity. The key issue, I think, is what are the downsides? And the one thing you've got to have is a very, very strong network platform. Because imagine if you have 600 million people on a mobile banking platform and you don't have the infrastructure to support it. You could have a major banking crisis on your hands. So I think that is one of the key areas that banks will need to look at is, one, the strength of their mobile platform provider, and secondly, what other contingency plans do they have in the event of failure? Yeah,
and as you say, understanding how to have sustainable growth in the model, knowing how many customers you can take on and support. When it comes to that technology, you also have to have power to support the technology. And so that, of course, will be a major consideration when you're looking at more rural areas.
Absolutely. And I think this is why most banks are now starting to even test green technology. We have a few banks that have already tried wind power, solar power, to look at countermanding the demand for electricity and looking at other alternative sources as well. And I think it could open up a new avenue for banks actually in penetrating some of the rural markets as well.
But do you think banks are going to be comfortable having their brand within kind of one space with another brand? I mean, is that not an issue for banks?
I think it's one of the proprietary issues that banks are going to have to tackle. But it's inevitable that with the cost of actually opening up a branch, that banks are going to inevitably see that it just doesn't make sense. Secondly, I think branches are there to serve rather than to sell. So, I mean, banks are using them as a selling platform now. I'm sure that my postulation is that they'll probably look at alternative selling channels and having branches purely to serve and the needs of customers per se.
I mean, apart from that, apart from the fact that you might have spaces where people go to interact with their banks that is supported by technology for all banks, what else is mobile technology going to look like in 15 years' time?
Well, I think the customer needs are changing. And where you find that mobile technology purely serves the need for purely transactional banking business, I think the competitive landscape is going to change. Customers are looking for more. They're looking for loans. They're looking for home loans. They're looking for personal loans. And unless banks are going to couple their cell phone platform or offering with other ancillary products like lending products, where there's a dire need for SME financing, I think what you're going to find is the competitive landscape is going to shift to banks who do offer that competitive landscape as a package with their mobile banking platform. Bank customers are becoming quite sophisticated in Africa. Their needs are changing. We have a growing middle class, as you said, growing needs. The need for financing is such, not only the need for transactional banking.